Tuesday, September 10th, 2019, Maneco 64, home of alternative economics and contrarian views. Before I start today, I'd like to thank all those who contribute to the channel, and they know who they are and they do it regularly. I really appreciate it. Thank you very much. Today I want to talk about a book that I highly recommend if you really want to learn about monetary history and what we're going to experience. It's not going to be the same. It's going to rhyme though. History repeats itself. It rhymes. It's not exactly the same, of course. And cycles are always there, mainly because most people don't learn history, and generations pass on and people forget things. But with all the new subscribers and more viewers that I get, people forget that I actually made a lot of videos about books that I like, and I will make soon what I used to call a book stream, maybe do a live stream and talk about the books that I like, or just a video. But today, for all the new viewers and subscribers, a book that you must read, that I read even before the great financial crisis of 2008, and it convinced me that we were on the path to where we're now, like where there's no way that we're going to be able to avoid all fiat currencies, and that includes the Federal Reserve note or the dollar. It's not going to be able to, we're not going to be able to stop them from going to zero, which is what happens every time in history. Of course, it takes more time for some paper currencies to go to zero than others. The book is Fiat Money, Inflation in France, How It Came, What It Brought, and How It Ended, by Andrew Dickson White. It was written in 1912. Andrew Dickson White was, I think, the first president of Cornell University, one of the founders of Cornell. He was a skull and bones, though, and he went to Yale, of course. But that's the book. Not a very long book. You can find free PDFs online, or you could buy a softback, a paperback, I mean, or you could buy a hardback. It's a book I recommend you have on your shelf in your library if you have one. So before that, of course, I'm going to look at where the markets are this morning. Fairly early. It's just gone past 7:33 a.m. London time. Yesterday I was out most of the day. I went to play golf. In England we have what people call golf societies aside from golf clubs, and sometimes you go to play a different course. So I was out most of the afternoon. Didn't really follow too much the markets. One thing that I saw that was significant was the move in the bond markets. Bond prices dropped quite a bit. Yields rose fairly sharply. That was on the back of a rumor from anonymous sources in Germany that Germany would start more fiscal spending, and that they would do it with what they're calling now a shadow budget. Because in Germany, of course, the rules are very clear that you can't spend willy-nilly. Fiscal spending has to be very controlled. So these anonymous people in Germany are saying that it's going to be a shadow budget, and they're going to use European laws or Eurozone laws. Not too sure about that. And that drove yields higher, not only in the US, but in Germany and Europe, in the Eurozone. The euro spiked up a little bit on the back of that. Not that much, though. So with that, let's start with the bond market. Yeah, the 10-year yield is now back up to like 163 after going down to around below 150 recently. So I think it was up about 9 basis points yesterday, which is significant. The 2-year is at 159, so the curve has disinverted for now. Of course, yields have been dropping very quickly. And as I've said many times before, in markets, things don't go down or go up in a straight line. So that's where the bond market is this morning. It's continued to rise a little bit, the yields. And in bond markets, when the yields rise, the prices drop. Spot gold, 1491.70 is down about 7. So we've broken below 1500. The low has been 1486 and the high 1500. Am I concerned about these price moves in gold and silver? No, not at all. If anything, it gives you more time and more opportunity to protect yourself with real monetary insurance for the future. Silver, down 6 cents at 17.94. Range has been 17.76 to 18.04. The Dow is down 38, 26,794 or 0.14%. S&P 500 is down 5.18%, just below 29.75. The Nasdaq 100 future is down 1/3% at 78.08. Sterling unchanged, 123.51. The euro is at 110.46. Also fairly steady. Dollar yen steady as well, 107.32. And Chinese yuan, the dollar is at 711.35, down slightly. So currency market's fairly quiet right now. WTI crude up 1/3, almost back up to 58, where it's 57.95. Brent crude 62.46, also up 1/3. So there seems to be a little bit of a hope that things are going to be able to pick up a little bit. I saw yesterday there's a GDP number for the UK. Instead of coming out at -0.1, it came out unchanged. And people thought that was a great number. Before I look into this book, I want to recommend a really good interview that Bob Moriarty of 321gold.com did with Crush the Street. I'll put the card up above, and I'll put a link to it in the description below. It's called Unpredictable Gold and Silver Price Bubble. No one will be able to call the top of this, Bob Moriarty. Bob Moriarty, I guess he's been a gold bug since 1968, been buying gold and silver since then. And he also says he doesn't have a fetish about gold. It's just that gold holds its value, and it's good insurance versus what he calls the stupidity of our monetary and governmental officials. I don't agree with everything he says, especially on the manipulation side. And yeah, but be as it may, Bob Moriarty, you need to listen to this guy because a lot of times he's right. He's not a perma bull in gold and silver. He's called some good tops in both. But what he talks about in this interview, you will find quite amazing. And I agree with him 100%. So recommend that. So now to fiat money inflation in France, how it came, what it brought, and how it ended by Andrew Dixon White. So let's go through what they say here in the back of the book, and then I'll look at some of the parts of the book that I think are interesting. Yeah, not long. You could read this in a day or afternoon. It says, in 1790, the French people, by general acquiescence, embarked upon what they believed to be a harmless experiment in currency inflation. The results of this action are vividly described in Dr. Andrew D. White's book entitled Fiat Money Inflation, How It Came, What It Brought, and How It Ended. The story of fiat money inflation in France is one of great interest to legislators, to economic students, and to all business and thinking men and women. It records the most gigantic attempt ever made in the history of the world by a government to create an inconvertible paper currency and to maintain its circulation at various levels of value. Well, that has to be changed now. The second most, right? It's it's not the most gigantic. It's the second most gigantic because what we've had in the last decade is the most gigantic, and it's not only by one government, but it's by the whole world, right? And that's the QE, the money printing, the zero interest rates, the negative interest rates. I think back then the French would have thought it was crazy that you could still have negative interest rates in the future. It also records what is perhaps the greatest of all government efforts, with the possible exception of Diocletian's, to enact and enforce a legal limit of commodity prices. Well, President Nixon did that, didn't he, in the 70s? It doesn't work. It creates shortage when you try to control prices, right? Every fetter that could hinder the will or thwart the wisdom of democracy had been shattered. And in consequence, every device and expedient that untrammeled power and unpressed optimism could conceive were brought to bear. But the attempts failed. They left behind them a legacy of moral and material desolation and woe, from which one of the most intellectual and spirited races of Europe has suffered for a century and a quarter, and will continue to suffer until the end of time. There are limitations to the powers of governments and peoples that inhere in the constitution of things, and that neither despotisms nor democracies can overcome. So it's not just despots, but also democracies. They can't control things. The law of economics. Legislatures are as powerless to abrogate moral and economic laws as they are to abrogate physical laws. They cannot convert wrong into right, nor divorce effect from cause, either by parliamentary majorities or by unity of supporting public opinion. The penalties of such legislative folly will always be exacted by inexorable time, while these propositions may be regarded as mere commonplaces, and while they're acknowledged in a general way, they are in effect denied by many of the legislative experiments and tendencies of public opinion of the present day. The story, therefore, of the colossal folly of France in the closing part of the 18th century and its terrible fruits is full of instruction for all men who think upon the problems of our own time. So that's for now. I'd like to show you a photo of what happened to the printing presses, because they were called the assignats, and then they were they became, I think, the mandats, and this was just after the French Revolution. The experiment started in 1790, and France was one thing that France had was massive debt. The French state. It sounds familiar. So, and the assignats were even backed by church land. They backed it by something, but it didn't work because you couldn't really convert it in the liquid way. So how it ended is that you see here people burning this paper currency, burning the printing presses at the Place Vendôme in Paris. This is in 1796. So this is how it ended. Just a few excerpts from the book. I don't want to go on for too long. Here it says, and these are about the symptoms, and you see that it sounds familiar. Now began to be seen more plainly some of the many ways in which an inflation policy robs the working class, as these knots of plotting schemers at the city centers were becoming bloated with sudden wealth. Hedge funds. The producing classes of the country, though having in their possession more and more currency, grew lean. Inflation. In the schemes and speculations put forth by stock jobbers, yet they are the hedge funds today, and stimulated by the printing of more currency, multitudes of small fortunes were absorbed and lost, while a few swollen fortunes were rapidly aggregated in the largest cities. Well, yeah, that's the 1%. Wall Street, the City of London, Frankfurt. In the leading French cities now arose a luxury and license which was greater evil than the plundering which ministered to it. In the country, the gambling spirit spread more and more, says the same thoughtful historian who I have already quoted. What a prospect for a country when its rural population was changed into a great band of gamblers. So there you go. Luxury, you can see nowadays, the private jets. I don't have to go into it, the 1%. So what made me think that this would eventually happen here? I mean, the symptoms are all the same. We're seeing, a lot of speculation, gambling, wealth inequality. That happened in France. At one point, they even you could be punished by death if you were caught using silver instead of the paper, right? So what made me read this book and what made me think this was the path we're going down, even back in 2002 and 2003 when I first read this book, where was the speech given by Ben Bernanke about the printing presses. I think it was in 2002. I forgot where he gave the speech. He said that they could always inflate the system, that there wasn't a problem. And that's when he got his nickname of Helicopter Ben. If I had to tell anyone today to read a book so that they could know what's really happening and how things are going to end up, it would, in the monetary system, it would be this book. So highly recommend it. And you can get it for free online, a free PDF, as I said earlier. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. Make sure you hit that little notification bell above to be notified of all my new videos. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.